Your wealth deserves stability, expertise, security. Your wealth deserves LGT Cresto, private wealth with over a century of global heritage.
Hello and welcome to the Global View on this Thursday. Well, let's take a look at what happened on global markets overnight. They did continue to weaken as China's economic growth weakens and weighs on investor sentiment. On Wall Street, the major indices slipped further into the red after the Fed Reserve's minutes from its last meeting showed policymakers were divided over the need for more interest rate hikes. Bank shares extended their losses, seeing the S&P 500 bank index fall, with the Bank of America leading the losses among the bigger banks. Nvidia reversed early gains to end lower, having risen in the past two sessions as more brokerages raised their price target on the stock ahead of the chip designer's quarterly results next week. Cisco Systems projected annual revenue below market estimates, sending its shares lower in after-hours trade as an uncertain economic outlook weighs on demand. In the retail space, Target shares gained after cutting its full-year sales and profit expectations, even as its quarterly profit exceeded analyst estimates, as the big box retailer benefited from fewer discounts and better stocked store shelves. Walmart ended near flat, reversing intraday losses ahead of its quarterly results due out tonight, with it expected to raise its full-year earnings forecast as US shoppers continue to buy essentials even as borrowing costs rise. Well, for a view on the US tech sector and analysis of the results, particularly from those retailers, we're joined by Lachlan Hughes from Swell Asset Management. Lachlan, terrific to catch up with you again. Thanks for joining us. Let's first take a look at the broader market of what we're seeing. I guess this is a global story. We've seen this locally, but also in the States, we have seen that sell-off. What do you see driving that at the moment? We do have the issues with China, but also just in terms of growth we're seeing out of the States, perhaps with expectations that a recession will be avoided.
Well, great to be with you, Andrew. We're definitely seeing the consumer being impacted by rate rises. So I guess we've been expecting this for some time, and it's finally starting to come through. We saw that in Target's results overnight. Excuse me, Target's results overnight. The consumer is trading down, so less on the discretionary items, spending more on the essentials. And look, we just expect that to continue through this year. I think the macro is definitely weakening, but holding up better than most would have expected. So I think at this stage, the way we see the market is it's definitely a stock picker's market. You need to be in the right companies. I think owning the index will be challenging over the next 12 months.
All right, well, you mentioned Target. Let's take a look at those retailers, what you're seeing right there at the moment with it did cut its full-year sales and profit expectations, although quarterly profit there exceeding those analyst estimates, as I mentioned. We also do have Walmart out tonight. So how are you looking at those stocks in particular?
Well, I think for Target, they've lost a little bit of share on looking at the numbers here. So I wouldn't be surprised if Walmart's picked up some share. Walmart seems to be the better retailer. I guess if anyone's thinking of investing today, the Walmart is the one that has the higher exposure to the essential items, which people continue to buy. So I feel very good about the Walmart result. Obviously, we've seen some of the retail results come in soft, but it's principally been on the discretionary side. So you look optimistic about Walmart's result, but we'll wait and see.
All right, but that's on the basis that expectations there, perhaps that consumer spending weakening, but still holding up significantly.
Yeah, look, that's the key point, Andrew. And I think these for the consumer, they're hanging in there for now. And the companies like the Target with a high proportion of discretionary sales, you're going to see more of the impact. But again, coming back to, I guess, being the stock pickers market, Walmart, you would happily own ahead of any other retailers at the moment. We're seeing that through the results coming in today. So I guess the key takeaway is consumers hanging in there, but they are trading down.
All right, Lachlan, let's switch to the tech sector. Of course, been incredibly dynamic, some outstanding gains made there, particularly from the beginning of the year, and the headline stock being Nvidia, of course. And a lot of the brokers refocused on NVIDIA at the moment. It has come off a little recently, but then we've had recent upgrades on its price target. How are you viewing NVIDIA at the moment?
Well, what we're seeing today is that there's an incredible amount of demand driven by artificial intelligence, and that's really growing the demand for NVIDIA's GPUs. And we're seeing that across the board. So I guess the stocks that we own, whether it's Amazon, Google, or Microsoft, they're acquiring these H100 and A100 chips from NVIDIA because they're the Rolls-Royce of chips, and they're required to run the AI workloads. And in addition to this, we're seeing it for NVIDIA across all clients, industries, and regions. So, very, very strong. And there's around $1 trillion of infrastructure in data centers around the world, and they're predominantly run by CPUs. So there's a very big opportunity over the coming years for those CPUs to be replaced by GPUs, which obviously are the ones that NVIDIA designs. So I guess we're at the start of a 10-year transition, and Gen AI is really driving this demand. But I guess we can't look at the upside without looking at some of the risks as well. And from our perspective, the key risk is supply. And NVIDIA, a lot of people don't know, but NVIDIA designs the chips, but they don't manufacture the chips. They're manufactured by Taiwan Semiconductors. And we heard from TSMC's result recently that supply is constrained. So I believe NVIDIA will sell any of the chips that they get their hands on, but potentially there could be some supply constraints in terms of acquiring those chips.
Yeah, and as you've mentioned there, Lachlan, of course, NVIDIA, one of those companies that have really benefited from that hype around AI. We're also seeing that Cisco was out with its results out overnight as well, and it's once again another one of those companies mentioning AI, talking about how it can build AI features into its existing products. Did you have a chance to look at that, and what do you make of its positioning at the moment?
No, I haven't had a chance to look at Cisco yet, but I think all of these companies are trying to work out as quickly as they can how they can bring this AI into their existing products. We see it with all of the big tech companies and products companies as well, like whether it's Salesforce or Oracle. Everyone's trying to work out how they can implement these AI services into their existing product suite. And I look forward to looking into Cisco a little bit further today, but we just see this across the board. It's amazing. I mean, we think it's the fourth revolution. Obviously, the PC in the 70s, then we moved on to the mobile phone and the internet, and finally, we believe now we're at the start of a long transition as artificial intelligence becomes a key part of what we do every day at work.
And another one of those companies, I guess, positioning itself in that regard to the benefits and opportunities in AI is Amazon. Off the back of its results, how do you view Amazon?
Well, we talked about this one last week, Andrew, but we were very happy with the Amazon result. And I think the key part of the result, which we focused on, was the retail business, which has been under a lot of pressure. They obviously overbuilt significantly during the pandemic, and they've been trying to right-size their fulfillment. But while this is going on, they're also transitioning from a national to a regional strategy, having more distribution centres closer to the key markets. And what we saw from that strategy shift is that the cost to serve has come down. So the cost per package is coming down, consumers are getting the items faster, and that's driven the top line for Amazon. So very good on the retail side there. And then also the cloud business, which is growing very quickly. They are seeing optimizations by clients. So clients are looking for ways they can lower their cloud spend. And this should, from here, the optimizations are largely complete. So we should see going forward now revenue growth start to re-accelerate as more enterprises work on how they can integrate these AI services into their product suite.
So Lachlan, overall, when you look at those valuations, particularly among the tech companies, both on the NASDAQ and the S&P 500, do you feel as though they're at appropriate levels at the moment?
Look, I think for a business like NVIDIA, I don't believe that's at appropriate levels. It's one that we can't get too excited about. I think the valuation's very stretched. But look, in saying that, markets love when stocks outperform their expectations, and we think they'll beat expectations in the upcoming results. So the stock probably goes up, but from a long-term perspective, we can't get there. I mean, the valuations just aren't appropriate. But for a business like Microsoft or Alphabet or Amazon, yeah, like despite the fact that we've had a large run up in prices, we still see a big opportunity for these companies. And as inflation comes down, you're going to see money shift from companies like consumer packaged goods that were growing their revenue in the double-digit range, all based on higher prices and even losing volume. So as inflation comes down, these companies will look expensive, and you're seeing the smart money switch into technology now. And yeah, we still see a good opportunity for the big three there. You could probably throw Apple in the mix as well, though we do think that's a little bit expensive. But Nvidia, I guess, is just one for us that we can't get there on the valuation. So probably coming back to my initial comment about it being a stock pickers market, I think you have to be quite tactical on how you approach it.
Lachlan, great to get your view from Swell Asset Management. Thanks for joining us.
Thanks, Andrew. Cheers.
All right, that is the global view on this Thursday. Stay with us. The Open just a couple of minutes away.